Hey everyone, welcome back. I'm very excited to have with me Michael Compton, who is the Director of Pricing at Edward Jones. Thanks for coming.
Thank you.
And maybe before we get started, for the folks who don't know Edward Jones, if you could just tell a little bit about the company and also how pricing fits into that picture.
Edward Jones is a pretty well-known name. It's been around for 100 years. We've got close to 20,000 locations in 68% of the counties across the United States. We also have a profitable operation up in Canada. We're a Fortune 500 company, book about $12 billion in revenue. And where does pricing sit in the organization? It's becoming more and more key to the organization and one of our key drivers because we're owning more and more of our pricing decisions now. In the past, a lot of pricing decisions were dictated by prospectus, by mutual funds, but as more and more clients are now asking for and looking for a fiduciary relationship with a level fee, they're adopting fee-based programs, and that's one of the price points that we can control. So it's becoming more and more important for us to be proactive in our thinking around pricing.
Awesome. And pricing, where does pricing come in?
Well, it didn't come in actually that much until maybe about 10 years ago. So a lot of the pricing is driven by prospectus when you're primarily a broker dealer. But as more and more clients saw the value in fee-based programs and wanted a fiduciary relationship with just a flat ongoing fee, more clients started adopting our fee-based platforms. So today, the vast majority of our revenue now, we do price, and thus the need for pricing at Edward Jones.
So I know you've been with Edward Jones for roughly 10 years as well. So if you could just share your own journey into pricing, how did that come about?
Absolutely. So I was with Wells Fargo Advisors and Wachovia Securities, and my last role there was the pricing strategy leader for the cross-sell effort at Wells Fargo Advisors. So I had a team that did deal pricing. I also was the liaison with the private bank at Wells Fargo Advisors, and we would land. Okay, this is the business objectives, and this is the pricing we need across the whole corp, and if there's any deviations. And then we also worked on policies together. So how do we approach ultra high net worth clients, high net worth clients when we're doing relationship level pricing? So that was a great experience. But then I heard about a rollover in Edward Jones, and I saw tons and tons of opportunity because they hadn't built out their whole product set and their solution set yet. So I made the leap over there and joined a group called Firm Analytics, where you partner with product areas and business areas. Through that process, I helped them price their Rep as Advisor program. So that was very interesting, great work. Once again, I was able to kind of like build something. And my leader came to me. She said, you know what, I think given the situation, the evolution of the industry, we need a team dedicated to pricing analytics. So I was given the opportunity to build out that team. In the process, I took on more responsibility, leading other analytics teams within Firm Analytics to support FA compensation, compliance, branch development. But I always made sure I carved out like 50 to 60% of my time to be 100% dedicated to pricing analytics, as well as administrating our firm's client pricing committee.
Okay, fascinating. But your essentially your journey into pricing at Edward Jones came through product development.
Ultimately. Exactly.
Actually, in that context, what are some of the challenges when it comes to pricing, particularly when it comes to new product pricing in financial services?
The next evolution that my area went through, as well as the firm, is in that construct of having a client pricing committee. You essentially had a lot of senior leaders coming together on a monthly basis, and they were reacting to whatever business development was doing in the product space. So it was very reactive. It was good because it was cross-functional. You got a lot of really great opinions. You made good decisions, but the industry was just speeding up. So we made the case that we should be a little bit more proactive in our pricing. And in doing that, we moved pricing authority to business leaders, and then created the team that I lead now, the pricing team in the organization. Now, the challenges that we've run into is when you have changes in org structures, the operating model, getting agreement on who's responsible for what, how do pricing decisions get made, we had to come up with that on our own.
So that's actually a great topic. How do you make that up? How do you actually also create then internal buy-in, right? For like ultimately what you're describing is a change management process, and particularly when it comes to pricing, folks get very sensitive and protective about it. So what such a process look like?
So number one, we had great executive sponsors to begin with. So helping getting the organization to buy into this concept of a pricing team, ensuring everyone knew what our role was versus others in the organization, was really critical.
What is your role? Is that more of an advisor, or is that more of somebody that kind of imposes pricing?
We have two value streams on my team. The first value stream is translating business strategy into pricing recommendations. So we work directly with business segment leaders to understand their global strategy, and then we'll work with product areas marketing to get a good sense of the value. We kind of have what I say is like the pin on the recommendation. So we take all those views and we make recommendations on pricing.
Got it. Okay.
My second value stream for the team is more around the ongoing support. What capabilities does a firm of our size and complexity need to price in this new environment? So do I need an analytics teams that can run pricing models on a monthly basis, a quarterly basis? What benchmarks do we need to purchase? Do we need to invest time in pricing acumen in the home office, our branch teams? And then what do clients understand how they're paying, and starting to get into that area of the business.
Got it. So I imagine a lot of it was then also communicating your role and how you actually create value internally for the business, in that entire change management effort.
Absolutely. Leading up to the change, I did spend quite a bit of time, and I actually went on a road show. So I had a proposal. This is the direction the firm's going to go. I have executive buy-in, but CFO, what is your thoughts here? And I sat down with the CFO, head of product, president of product. Here's what our thinking is. What are your thoughts? So I got a lot of executive buy-in and got it actually down on paper.
Okay, awesome. Maybe just taking one step back in your industry, or with Edward Jones in particular, what are some of the overall challenges when it comes to pricing? So the way we think about it typically is about complexities, right? So product complexity, many different, different products, different customers, customer segments, number of customers, systems and integration, pricing processes. So there's a lot of complexity that could be there. Which one of those are particularly challenging for Edward Jones?
I would say it's a challenge that most financial services firms are facing right now, where how you monetize the value is very disconnected from the actual value itself. So there's been a lot of talk in the industry around alternative pricing models. So I haven't seen that shift really happen. Still I think it's something like 70% of compensation, when I was talking to some folks, is still coming from asset-based fees. But we know the value is really that advice and guidance that's being delivered by the financial advisor. And what type of account you have, or if you're trading often, that really doesn't correspond one-to-one to the true value that the client is getting from the financial advisor.
So it's like a lot of effort on finding the right pricing metric, how you charge, and aligning that with the value that gets delivered to clients.
Exactly. And you mentioned client segment. So for some segments, the asset-based model is actually really great. Great proxy for value being delivered. But you can kind of think about mass market, or, some affluent clients and ultra high net worth clients. There's probably an opportunity to kind of rethink how we price our services.
Got it. So in that context, what were some of the achievements that you've been particularly proud of in your career? I assume it has to do with change management, but
it does have. So I would have to say coming up with the vision and getting buy-in from the executives at Edward Jones to create a pricing team, that's probably one of my number one achievements. We've also made multiple pricing decisions in the past 5 to 6 years, I would say, which we played a heavy hand in. market. And I feel like it created a lot of value for the firm, as well as just ensuring that we're aligning pricing to what clients value. Right. So I think clients were winners in the end as well.
So how do you, and I know many folks ask that question, how do you actually generate buy-in with C-level? How do you get them to buy into pricing, invest resources into pricing? You built a team. Like how do you get that buy-in from executives?
I would say it is a ongoing learning experience. So even if you have processes in place, agreement on roles and responsibilities, if you change pricing, you impact several areas of the firm in different ways, right? You have different motivations. So, you change pricing for sales folks, they'll say something to the effect of, I finally got my story down on what my value proposition is. This is my price point. Why are you changing this on me? I don't want to have that conversation again. Could be a little bit of pushback. Also, if you make a change, operations, it creates work. Legal, it creates work. So you do always have to kind of learn how to navigate that. And the most effective way that I've found is to just bring folks along at the right levels of the organization. So bring transparency to what you're working on, ensuring that you are integrated into any ongoing development early on in that stage. And then we do have a governance process where we have a client pricing advisory group. They're not a decision-making body, but it's a cross-functional group of senior leaders that are actually in the work. So before it was almost like management committee, these are general partners and directors that are actually much closer to the work. We socialize recommendations with that group, get feedback from that group. We ensure our working groups have cross-functional representation is there. So legal, compliance, product. We really partner with them. But our role, though, is to shepherd that recommendation or that process. So getting the working group's ideas, we come up with a recommendation, we'll socialize it with our advisory group. And then finally, we want to make sure that our executive leaders, their divisions are comfortable and have transparency in what we're bringing as a recommendation at the end of the day.
That makes sense. You mentioned it's been a journey and kind of you had a few learning experience as well. I'm particularly curious about the kind of some of the hard learnings. So what were things that didn't work too well that you tried and said, okay, I wish I'd known this before starting my journey, and that could be a good advice for others as well?
So the headline I would give is the importance of communicating the why behind a pricing decision, very broadly. So we implemented a policy.
Communicating internally or externally, both?
Mainly internally.
Okay.
Mainly internally for this particular example. At one point in time, we implemented a policy change. So the amount of flexibility the sales folks had. And we did that along with a pricing change, but we didn't communicate the why behind it. And I kick myself even today because I'll take a look at what's happening in the field and how that policy is being leveraged. And because we did not communicate the why behind it, they all came up with their own reason on why we had the policy. And we've led several focus groups since then, and we've talked to sales folks, and some of it's really rational, but we didn't give them the why behind it. So we see this barbell effect in all the numbers on, are they using the policy and not, and then are they using it to the extreme and not? Knowing that, that was one of the clearest learnings for me over the past 5 to 6 years, and just how important it is to communicate the why behind pricing decisions and make sure everyone in the home office as well as the field understands the why.
That makes sense. All right, so let's shift gears a little bit. I would love to discuss a little bit the current market dynamics, right? So we have First Republic on the one hand, we have inflation on the other that's particularly impacting consumer-facing industries, but it's not just the financial services phenomenon, plus a looming recession. Just very curious how that affects your job. In particular, and kind of what companies, what competitors do in order to react to the current circumstances.
Yeah, so it has created some interesting dynamics. One of the things you see in this type of volatile market is a shift in product mix. So, and I think you see this across the entire industry. A lot of clients moving to cash because of uncertainty, and they were first fleeing towards banks, and now they're fleeing towards money markets because of the banking crisis. But how we price for our service is, what if you're providing a lot of advice and guidance, and you've got a client that's moving into CDs, which there's not a lot of pricing power around CDs. So those are some of the dynamics, and we leverage a lot of outside data sources to get a better understanding of, okay, if we're seeing this in our book of business, are similar firms seeing it also, and then also seeing if they're taking any actions.
Got it. So, and any learnings already in that area, things that you feel work better or not so well?
So it is ensuring that we are connected to our finance organization. They've got a really good pulse on the different trends that are happening in our books of business, and then if anything comes up that's affecting our overall ROA. So if you take total revenue over assets, we'll start to dive into it and say, okay, is there something from like a pricing perspective we should take a look here? And then we also will go through these periodic evaluations of, okay, if we did want to pull a pricing lever that we normally wouldn't pull, what are some of those pricing levers that we'd like to take a look at? We'll refresh the analysis, get a good understanding of, will it solve the issues that we're seeing? And that way we're ready to act when needed.
Got it. And again, complete shift in topics. I would love to learn where pricing currently sits from an organizational perspective. You mentioned, change management is important and getting buy-in from everyone. And I've seen very often that, being able to get buy-in has a lot to do who pricing reports to, how it's structured, if decision-making is central or decentral. So would just love to get a little bit your take on how pricing is organized within your organization.
So for the most part, pricing is centralized in our organization. We do give our sales team some flexibility in how they price, but for the most part, pricing is set centrally. And when I say centrally, it's done by segment. So the business leader one segment versus another segment. The pricing organization, or my pricing team, actually sits in a group called Firm Strategy that reports up through the chief strategic officer of our firm. I think it's a very good place in our evolution to have pricing because we're building it out. So we have really great connectivity to all the important drivers of our business, what's the longer term strategy, being within firm strategy. And then it's a great place for kind of like the heart and the mind to meet. So you got marketing that's thinking about the client experience and trying to define what that value looks like and what segments we're targeting. And then you've got finance that's looking at, okay, how are we driving economics for the firm? So I think it's a really great place to sit. It also is a great place to interact with the product areas that are developing the programs, because a lot of times they're coming to firm strategy for support around analytics, competitive insights. So at this stage, I think it's a really great place. In the future, it would be interesting to see, should it sit in a business segment, or should it be something like it was before, where it was almost like shared between marketing and finance.
Yeah, which is kind of always a discussion, right? Finance to have a bit more oomph in the background. Marketing, because it's one of the 4 Ps and there's a lot of market information. Very often it's also discussion, does it report to sales to get the data, the information from the boots on the ground? So the solution with strategy, I like quite a bit. Also has a bit more of that mid and long-term thinking baked in. Does strategy report directly to the CEO?
Yes, it does. Yes.
So you got
That's very critical.
An open door, yeah. Okay, fantastic. Do you see any other? So you kind of mentioned there will be likely, as the company grows, thinking around how pricing is organized and what reports to. Do you see any other kind of future changes? So the future of pricing, so to say, in your industry in 5 to 10 years. Do you see any developments up in the horizon?
Absolutely. So if you think about just taking a step back, if you think about why you went to a broker in the 80s, it was really so that you could access capital markets. This is the only way. And then come late 90s, you could make a phone call or you could go online, you could do it yourself, you could place a trade. So why would you go to a full service broker? Well, you're going then for diversification. How do I build a portfolio? That was the main value proposition of a financial advisor. But then fast forward to 2015, 2016, you've got the emergence of robo advice. So Wealthfront, Schwab got in the game. So you can get a well-diversified portfolio that rebalances, and they'll do investment selection for you and sometimes even tax loss harvesting for 25, 35 basis points. So why would you go to a more expensive full service advisor? And it's more about the holistic planning. So really understanding what the client's hopes, dreams are, keeping them invested in the market when they should. So with the volatility in the market today, that's a lot of the conversations that we're having with clients is stay the course. We have a plan, stay the course. We'll continue to kind of monitor where we're at. So that's mainly the value proposition today, but you could theorize that sometime in the future, it might even be broader than that, because I think technology is getting better and better, and that holistic planning, a lot of that's going to be able to be done through technology. So we've really got to think about what is our value proposition, and I see it starting to transition to look a little bit more and more like traditional professional services.
Interesting.
So you're providing advice and guidance. So how do you charge for that advice and guidance? And where it's really starting to show up is on the peripheral. So the ultra high net worth, where they've got some different needs, as well as for the mass market. So how do you provide quality advice and guidance to the mass market when your main constraint is the capacity of the professional, and doing it in a way that they're willing to pay for it?
Which is, it almost sounds like a repetition of the challenge you mentioned before. You have to think about different pricing metrics and different revenue models to monetize on services, right?
Exactly. Yeah. So I'm actually super excited about that. My firm's purpose is to make a positive impact on the communities that we're in, and investigating those different business models with the different pricing frameworks is something I'm really excited about.
Okay, awesome. Last question for you. What career advice would you give your younger self 10, 20 years ago when you started your journey into pricing? What do you wish you would have known back then?
A couple of things I wish I would have known. One is the wealth of development, wealth of information, the development you can get by engaging outside. So learning from others that do pricing as well, joining groups like the Professional Pricing Society, because a lot of times you just know what you know is sitting in the seat that you're sitting in. The other advice I would give is think outside the box. Your organization has a certain org structure, it's working really well, but if you see an opportunity where pricing, creating like a pricing function or pricing roles within the organization can make a positive impact on your organization, think outside the box. Like, we need a new team, it needs to sit here, and share your thoughts with your senior leaders, and try to find that in the last but not least, try to find that executive sponsor, because that is the way you're going to get it done.
Awesome. Well, thank you so much. It was a real pleasure. Very, very interesting. Hope you guys enjoyed it as well, and see you next time.
Thanks for watching. If you like this content, click like, subscribe, and for more great pricing videos, check out the rest of our YouTube page.